Want to learn how to use the Bollinger Bands correctly so you can avoid market crashes and know exactly when to buy and when to sell so you can actually generate monthly income? And I'm going to show you exactly how most people use this and why it's wrong and it will lose you money. And I'm going to show you how I do it so that I can make money in any market environment and actually profit from crashes as well. I've been using this Bollinger Band indicator for over 5 years and I'm super excited to share with you what I have learned about it and how I use it. And if you stay till the end, I'll give you some trade ideas that you can implement today to make some money. So let's dive in. First things first, we need to add the Bollinger Band to our chart so we can actually use it. So I'm using TradingView.com, which is a free charting platform and website. So they allow you to chart on there, which you can do too. But again, if you're using your broker like Robinhood, Fidelity, TD Ameritrade, something like that, all these brokers support the Bollinger Band as well, so you can do the exact same thing. We're going to go here to the indicator section. We're going to type in Bollinger Band, which is Bollinger, and then bands. So again, we have the Bollinger Band. We add that to our chart, and this is what we see. So what exactly are we seeing here? Well, this middle line right here is a 20-period moving average. So this is a simple moving average that you've probably heard of before if you've been in trading for any amount of time. It basically just shows the average price over the last 20 candles. And so again, it shows us these key levels. How you read a moving average is if the stock is above it, it's bullish, aka it's trending up. If it's belowish, it's bearish and it's trending down. Now, what are these blue upper and lower ranges? This is a 2 standard deviation. So what does standard deviation mean? It's a fancy term that just means if you're out 2 standard deviations that you're covering 95% of the stock move. So there's a 95% chance that the stock will move within this range. If it breaks out of that range, that's a 5% chance, but 95% of your trading day will end up within these bands. So how can we use this to make money? Well, first I want to get into the most important topic is how are other people using this and why is it losing them money? So what we see here is one of the number one strategies that people use, again, there's a lot and I'm going to cover a couple, is they use the Bollinger Band squeeze strategy, which is where you can see here how the Bollinger Band constricts and moves. You can see here how it's wider, and then in this range, the band starts to shrink a bit, as in the bands get closer and closer together, and then it breaks out, and you can see here how it goes up. So this is a form of a breakout approach. This can work, but I'm going to show you where this will fail here in a second. But again, you have the Bollinger Band where price starts to shrink into this tiny little area. Some people call it a sausage. You get a sausage trading there, and then it breaks out. So what is wrong with this? Well, just because it's shrinking doesn't mean you know when it's going to break out. So again, you do have these cool breakout trades, but it could be a false breakout. It could be something like that. And so again, this doesn't always work consistently, right? Because think about this. If you were trying to trade this, how would you have done that? You're like, okay, it's shrinking. So I can see here resistance is here. Oh, cool. Resistance broke out. The Bollinger Band is moving up slightly, and then it would have faked you out, and then would try it again, and then it would have faked you out. So it would have been really hard to actually enter in this trade. So again, this is a time where it's very hard to actually do that. Another way that people trade it is that they tried to trade when it breaks out of that range. Like I said, when the stock's trading within this band, that's 95% of all the time that price action will be there. But here is an example. When it breaks through it, people tend to get rid of it. So for instance, if it breaks above, they tend to sell it short to make money to the downside. If it goes below, they tend to make money to the upside. And yes, this does work on a very short-term basis, but what happens when something like this happens, where it's hitting the top, but it's still trending up? So you would short, and then it would still go up. You would short, and then, okay, it would go down here, but look at this whole period. It hits it, and then it still goes up. It hits it, and it still goes up. It hits it, and it still goes up. It hits it, and it still goes up. So if you're trying to short those up moves, that's not going to work either. So those are 2 different strategies that other people use. So if you're doing that, please be aware of those failure points where you will actually lose money. Now, how do we use this to make money? Well, we need to stop doing what everyone else is doing, right? If everyone else is doing it and they're losing, why would we copy them? So let's go in here to the Bollinger Band settings and change it a bit. I'm going to go here and change it to 200, which means that the moving average, the center line, is looking at the last 200 days. And I'm going to change the standard deviation to 2.2 because I like to be fancy, and this is what I found works best over time. All right, so what does this now show us? It shows us the exact same thing, but on a larger time frame because we're looking at the 200 period moving average. So what we see here is when we break out above, we have a very high likelihood of the market crashing, right? When it breaks to the downside, we have a very high likelihood of the market reversing back up, right? Almost every strategy in the world, breakout strategies, triangle patterns, MACD divergence, RSI divergence, all these strategies that I know you probably tried in our trading work in very specific markets. When you put the Bollinger Band like this, it tells you what markets it works in. Let me show you. Right here, if you're above the middle line, but below this, below the top line, this is known as an uptrending market. The strategies you look for are breakouts, are resistance plays, are dip buys, are things like that. You're trading momentum, you're trading strength, you're trading an uptrend when you're in this range. Same thing below it. When you are below it, below the middle line and below or above the bottom blue line, this is a downtrend. And so you're going to trade downtrend plays. You're going to trade support breaks. You're going to find rejection points. You're going to be trading the downside short and inverse ETF. So that's exactly when you do it. Now, when you break above the upper band, you're now trading short so you can make money to the downside. So short moves right here, that means you're going to be doing things like entering a call credit spread, which makes money to the downside, buying puts, which are going to make money to the downside, shorting or buying an inverse ETF, because those can go up as much as 10 to 30% in this single move right here. Also, if you're interested in checking out my Discord, where we trade this type of strategy, where we trend trade and we make money from it using options, I have an exclusive free trial link down below. This free trial will not last long, but again, you can check that out down below and also get 3 free amazing trading gifts that you keep for life, even if you cancel your trial. All right, guys. Also, to the downside here, what we have is when it gets below the bottom line, now we are entering the optimal mathematical level of a dip buy. You can see here, when it breaks below, this is the perfect time to get long for any investments. It's the perfect time to enter in calls, to enter in stocks, to trade long as this period underneath the band. Now, again, you can see here back in 2020, this huge crash could have been avoided and you could have made money from it. Why? Well, because look, the market was above the band. You knew to get short, and then look, it crashed, and then look, it went below, so you knew to get long, and now that was perfect. That's exactly what my team did. If you were in my Discord at the time, my team and I did this. We were out of the market. We got in puts. We made money to the downside. Then we got in our long-term investment portfolios. We put in shares here, and then we rode it back up, and so now we're sitting pretty. And again, you can see the great dip buy opportunity. Here we go. Avoid the huge crash. We can see here in this area, we have an uptrend where we can make money from resistance breaks, all these plays. So I don't use the Bollinger Band as buy and sell signals, and you should not be doing that either. You should be using it to decipher what market am I in. Am I in a market that has a better chance to make money to the upside? Am I in a market that has a better chance to make money on the downside? Or am I at a rejection point? Am I at a dip buy point? And use the Bollinger Band to determine those levels, and then use a strategy to take advantage of it, like I've been mentioning for each one of these scenarios. So that's how I use the Bollinger Band indicator, and have been using it for the last 5 years to avoid crashes and to actually make money, because I know when my strategies work and when they don't. All right, guys, smash the subscribe button, and I'll see you in the next video.